Lastly, with liquidity rising, regulatory clarity increasing, and sellers exhausted, Bitcoin might be gearing up for its next big move. Meanwhile, blue chip crypto assets are catching fresh bids. Is 250,000 Bitcoin on the table? Will old coins beat new coins this cycle? Let's see. So I just wanted to point out a couple of things here that I thought was particularly interesting. We already talked about a little bit of uh, the first part with the dollar fallen and gold fallen. So let
Hmm.
me just pull up my chart over here. So we're seeing here the dollar making its first lower low, which is beautiful. Oh man, we want that lower low. So we were talking about how in 2016, the same thing happened when Donald Trump was president then, where the dollar peaked up and then rolled over, and that was a nice run in assets. If the same sort of thing is happening here, we can expect that perhaps the dollar comes back down to the 100 support level, and that could be more than enough liquidity in order to drive a move higher. Um, what I care about is that the dollar's fallen at the same time that uh, gold is falling,
And at
right?
the same
So
time that global liquidity is rising.
exactly.
Hmm.
So when you're seeing that, it's when you get these confluences, these correlations happening together, that's where it's assigned to you that okay, there's something here to pay attention to because all these trend moves that are going to be the beginning of a trend turn for the next couple of months, they happen like this, like they coincide all together,
Sure.
and that's what we're seeing here. The liquidity indicator, let me just pull that up for a second. But what was it again? To liquidity index, I think this is the one. Nope.
It's in the community one there. My username's there at the top.
I modified it
Oh, that's
to
right. You have the custom one. I need to
yeah,
make my improvements there.
yeah. Actually, let me just take off the screen for a second. So just to mention, I wanted to bring up something that let me pull it up here. So this is an article that was in Kitco News. So it's not just us saying that, hey, there might be some sort of breakout potentially happen in Bitcoin. We're seeing it in other places. I thought this was a particularly interesting piece. They're saying institutional demand is pushing Bitcoin higher.
Hmm.
Recent data suggests that OTC supply of Bitcoin is drying up. Both MicroStrategy and BlackRock continue to buy BTC at a pace exceeding daily production. Once OTC desks run out of available supply, they will have no choice but to buy directly from exchanges, which will put immediate upward pressure on price. This is a textbook example of supply and demand mechanics playing out in real time. Another positive sign comes from on balance volume, which appears to have bounced off a key support level on the 4 hour chart. This suggests renewed accumulation, a potential early sign of a broader trend reversal. So when I start seeing things like this, I get really excited. Have you seen other people talk about the idea that it's not retail that's pushing this move up? That's going to push the move up in crypto, but it's going to be institutional investors.
I mean, that narrative has been continuing since roughly 2018, 2019, when I first started hearing about institutional involvement. Have I seen a return or a resurgence of that lately? Not any more than usual. No, I think that the institutional involvement is right in line with where we would expect it to be. Um, yeah.
I thought it might be interesting to pull up. I like listening to what Charles Hoskinson, the founder of Cardano, has to say. Not just because I like the Cardano project, but because he is him and his organization is deeply involved within the regulatory framework of crypto within the United States. Like they're one of the people who are really pushing that, and so he's connected to he's been at Senate hearings. He's connected to the people making the decisions, and there's three particular videos, short videos I wanted to show of him discussing this idea here. So the first one comes from we talked about a couple of weeks ago that when Donald Trump became president, there was this push towards regulatory clarity that the administration was asking for. So they put out a call for basically information to be provided to policymakers.
That's right.
Um, and then, so the idea here is that Charles is talking about that process is essentially underway. And let's hear what he has to say.
It's going to take 90 to 120 days to get some basic laws passed. It looks like stable coins will be the first that they regulate, and then moving from that, they'll do asset classification. But before the end of this year, I do believe very strongly that we will be on much stronger foundations in the United States and thus globally for running a cryptocurrency business. It's going to take.
So we're seeing a front run of that sort of thing with XRP. That's up to
Mhm.
what, $2.45 now. Like what we thought was this dead coin, all of a sudden is skyrocketing higher than a lot of these altcoins. And so Charles also talks about that on an interview he did with, shoot, I forgot his first name.
And 7 or 10,000 people got liquidated. We are just getting started. So I'll give you two statistics. One, $760 billion left the market when the tariff thing came. That was larger than Luna or FTX on that day. And 7 or 10,000 people got liquidated one day. It's twice the size of the amount of people got liquidated during the Luna collapse. Took us 2 fucking years to recover from that. We
Yeah.
recovered in 48 hours from that event in terms of volume,
Crazy.
liquidity, these other things. Okay, these are hot markets. So now when these guys just this is an uncomfortable thing for us as an industry because this is the first cycle in the time I've been in crypto that's not retail led. The last 3 cycles were all retail. This cycle's institution led. And it's a lot bigger, a lot more organized. And so I don't know how it's going to pan out. I know everything's going on. I think Bitcoin's 250K minimum, and everything's a ratio of that. But I don't know how long that's sustained. I don't know where we're at in the cycle. I just know that it's impossible when the U.S. government is pumping your bags for your bags not to go up. They were the original pumper. It's called the Federal Reserve. We are
And then the last one over here is this idea of what will get the traffic.
the markets are shifting a little bit, and they're going back to blue caps, blue chips. They're going back to the reliable, the dinosaur coins, as people like call them, like XRP and Cardano and Ethereum. And they're moving away from the new stuff like memes and these types of things because it's no longer retail led, it's institution led, and they have to go to a flight to quality. So
Yeah.
those are going to be the ones that drive the market. Bitcoin is going to be the biggest winner because it's going to be in the sovereign wealth funds of pretty much every country. 20 to 30 major countries, hundreds of billions of dollars of buying. U.S. government already holds 212,000 Bitcoin. Just give another 6 to 12 months. So we'll see a bull market probably when the stablecoin bill passes.
The government got those for through seizures and
That's right.
forfeitures, but until the U.S. government starts purchasing Bitcoin as part of our reserve, oof, that'll be the pump of the century. There's no question about that.
Yeah, so I'm really excited about this idea. Well, first, Charles doesn't normally talk about price. Like his whole thing is that he does not talk about the price of an asset. So if he
Mm,
feels that that's the case, it's like no, he thinks this regulatory clarity is going to come. XRP is our test case for, or one of the test cases for what happens when if there is going to be clarity, because I mean they've exploded up XRP. Ethereum looks like it looks like it might be preparing for a short squeeze. There's record short interest on Ethereum right now.
mm.
One, because it's a nice play to be long Bitcoin and short Ethereum. But if that needs if that needs to cover, you can get GameStop level squeeze on Ethereum. Solana is barely took a dip recently. So you have a bunch of all the selling pressure that we would have expected. Like I would have expected, like we were talking about, 88,000 in Bitcoin, 74,000 on Bitcoin. Heck, maybe we still get there, but we're not there.
Mhm.
And you can have you can have a correction in an asset over time, not only in price. So the longer that an asset consolidates, the less likely sometimes it makes the downside risk. Do you feel the same way?
Yeah, I think consolidations get a little worrisome because it's still unclear which direction you head to. I like to see nice confirmations of ranges that are still in that upward trend, but we discussed that consolidation concern even through most of 2024 when Bitcoin was in that long consolidation cycle between March before it finally broke to a new high in November of last year, and that consolidation period was sort of the only way that it was going to move out of it is if we saw a break above 74,000 or a break below 53 roughly.
Right.
And we did see a quick break below 53, which was immediately recovered and then shot upward from there. So the thing that would concern me about long consolidation ranges is a break to the upside or downside from there.
I see. Well, the we also had PMI. The PMI ticked above 50. So the PMI is the it's a diffusion index, so it's not like it's just measuring the opinion of a certain market participant, especially in the
Mhm.
manufacturing sector. But usually when it's below 50, or is it 48, I think it is, that's where you're like in recession territory, and that it's moving up towards 50 means that we might just be at the beginning of the cycle. Let me just share my screen real quick. So over here we have the PMI, and anyone can see that it oscillates in this sine wave, and these represent a business cycle and business cycle expectations. And so if this was a bottom that we had recently, well, we're really at the beginning of this move. Like, we're not, a bunch of people are like, oh, we're three-quarters way through the bull market. It's like, no, we might just be really at the beginning of this thing, if this is actually, if the correlation picks up. Also, if we take a look at the liquidity thing I was talking about before, so this is Mike's, your liquidity indicator that's just offset by
By 70.
70, yeah, 70,
Mhm.
yeah, 78 days. And I've been following this, and the sort of like the it's not exactly the average, but the mix between the current liquidity and the lagged one gives me a sense of what the actual liquidity is at the moment.
Mhm.
And that's why over here I'm expecting to see a significant bounce, because we have both the concurrent liquidity now that's moving up, and the liquidity 78 days ago is moving up at the same time. And
Right.
so I'm expecting to move all the way up to 100, and I mean, not expecting all the way to 109, but I have my long position up to 106 thousand on Bitcoin,
Sure.
before we go sideways and then up again. And if this happens, this rise here would then happen in April of 2025, that we would get the full breakout to 22,000. Oh, sorry, $250,000 in Bitcoin.
So, to support your thesis a little bit further here, we talked a little bit about my technical forecast on Bitcoin back in January, and I had kind of scribbled on some ideas about where I thought Bitcoin goes from here. Interestingly, we're kind of moving into that territory of what I originally drew on my screen, but I'm still looking at that break of 110,000, and I would still be expecting we head to this range, up to about 180 to 195,000 if we continue from here. There's there's no doubt in my mind at the moment, though, that this current consolidation, though, is still part of this 74 to 110 range. That is an important critical area. If we do pull back at all in the short term, I would expect that 75,000, 74,000 remains as support, and we would we would see a continuation from there. So we'll see how close my little green scribble actually ends up being into the future here.
Awesome. I love seeing this then. So the in that box range, does it matter how far to the right you are of that box? Does it make it less likely that you actually get down to the lower end of that range?
No, I don't care how wide it gets. As we saw, like in the previous box here, this range still maintained throughout the entire period, even though this was a solid 8 months, 9 months. These ranges can last quite a bit, quite a long time. The important factor is whether it respects that range and it serves as support and resistance. So what we're going to be looking for is whether we see support at 75,000 to maintain this range.
Well, what I've always been saying is that the missing the upside is the painful move, not missing the downside, because you can always get back in at if it drops. And so for me here, it's like long until, I like that you're saying 110 there for the top, because 109 is what I have on my chart here.
Hmm.
I'd be closing my long position, waiting for the break, and then look for a pullback. But as far as accumulation is concerned, like, this is where I started messaging all my family members and friends and be like, you got to start accumulating some Bitcoin. You got to start accumulating it, because I don't want to be the guy who later on they're like, "Why didn't you tell me to buy?" He's like, "No, this is the time." I think, like, if there's any a bunch of signs that point to bullishness without it breaking out to 150, now's the time, I feel.
Sure. Yeah, totally agree. I think there's still plenty of upside too.
So let's take a moment to shout out TradersPost, the automated trading platform designed to take the friction out of executing your strategies. Whether you're trading stocks, futures, or crypto, TradersPost connects seamlessly to your broker or exchange, giving you the flexibility to automate your trades without missing a beat. If you're tired of being the bottleneck in your own success, it's time to let automation do the heavy lifting. Head over to traderspost.io and see how easy it is to streamline your trading. Okay, now I feel like a real podcaster. Not that there's an ad break inside of it.
Yeah, we got an ad break in the inside. I like it.